Okay, thanks everyone for joining. We're going to give it another minute or so for everyone else to join up and we'll get started. Thank you for joining. All right, let's get started. Thanks for joining this week's webinar on identifying four alternative buy signals where we go beyond our classic traditional breakouts. Okay, here's a quick disclaimer. Everything I'm going to talk about today is for informational purposes only. We're not licensed here. None of us are. So it's just not financial advice, just for educational purposes. Thanks. Give you a couple seconds to read that. All right. I'm today's host. My name is Sunny Phan. I'm one of the premium product coaches here at MarketSurge. And here's a quick agenda for you. I'm going to do a quick recap on what are traditional breakouts. We'll then talk about some early entries using trend lines, looking for a buy signal from the relative strength line, blue dot. We'll also talk about our secondary entries where you can consider adding to your position via a pullback to the 10-week line, along with tight areas, which are both indicators you can find on the charts. Finally, we'll end on some key takeaways. Now, just to preface, there's a lot to be covered today, so I just want to let you know, don't worry about taking any copious notes. This is recorded. It will be uploaded within 24 hours on our homepage, okay? Thank you. So, quick recap, what is a traditional breakout? Let me jump to a quick picture here. I'm sure by now a lot of you have played around with the charts and know what this looks like here, right? We have a nice cup and handle. Our pattern recognition algorithm, that's an overlay on any stock or ETF chart that you pull up on MarketSurge. It's going to show you whether there's been, a consolidated pattern or a cup and handle. And from there, it's going to shade. I know it's a little hard to see. I'll show you later on live, but you'll see a little shaded blue area right here where it's going to tell you where to consider jumping into the stock, where it's essentially a breakout or a traditional breakout, right? So if you're following the pattern recognition algorithm and you want to get in on the most optimal point of a breakout, you're going to get in the blue area. That's not what we're talking about today. What we're talking about is getting in outside of the day that it pierces through that pivot, right? So let's go back up. Just a quick recap again. What is a traditional breakout? It's basically when the price action pierces through the resistance level, right? And it reaches that blue pivot area and it's signaling that there's potential for it to break upwards and onwards as a new uptrend for that stock, right? Now, coupled with this traditional breakout, normally you would want to see the same things, right? You want to see strong volume, usually 40% above average. And you also ideally would want the market to be in an uptrend that will, or a higher exposure level that will give you support to jump into the stock, right? So that's quote unquote a traditional breakout. Okay. Another thing to note is on these traditional breakouts, normally you get a range, right? Because not everyone's going to get in exactly when it pierces through there. So they typically give you about a 5% range, which is the top and bottom part of this shaded box right there. Okay. And not all breakouts are going to be successful. Otherwise, we're all probably going to be sitting on the beach with this information, right? It's not a perfect science. So that's another reason why traditional breakouts, although it's good to establish a baseline routine and have confidence in it, sometimes it could be a false breakout on low volume. So that's why it's important to have alternative buy points, right? So here's another chart for you, just for more information on why do this, right? Again, classic breakouts, they're timely, right? You would have to, get in on the day it's breaking out if you're trying to do that. And you might not always get in at the perfect spot. It might even gap up and shoot past the breakout, and you might not even have a chance to get in, right? So because of that, that's part of the problem, and also because they're not always successful. So with that said, that provides additional opportunities or more chances to enter in a stock that we really like and we like the data, and you just happen to not get in the first shot, then like they say, the best time to plant a tree was yesterday, and the second best time is right now, right? So that's what this is essentially. It gives us more flexibility and more tools, equips you with more tools to get into the market and get into some of these strong stocks, right? So let's talk about the first buy signal, okay? And that's going to be our trend lines. So you can draw trend lines, and we'll give you a quick visual. You can draw trend lines on MarketSurge. And as you can see here, I've drawn one on this chart that's connecting a couple peaks of the highs of recent action here. And by drawing a trend line, you're able to identify the downward shift. And at that point, you can see where the current price action, if it pierces through that downward shift of a trend, if it pierces through that trend line, you may have some potential for it to keep going upward, right? So I'm going to show you guys live in a second how to draw a trend line. But just some quick basics. What determines a trend line? You want to connect multiple price points, all right? At least, ideally, three or more. Okay, like this, one, two, three. O'Neill talks about this in his book as well. Two, I think two is not enough. You want at least three. Two, you're kind of on the fence at that point. And it's going to help us identify potential entry point or to get in earlier than the breakout, right? Because if you look at this consolidation base, the breakout would have been somewhere here, right, where the resistance level is. By getting in earlier from a trend line that you're identifying, you would potentially get in somewhere here. That gives you more cushion and wiggle room if things go south, right? So let's say you get in here, you pyramid in, right? You can maybe go in at 50, the 50, 30, 20 rule, right? Maybe you go in at 50% here, it gets the pivot. Maybe you're seeing some more signs of it going, uh, um, being bullish. You put in another 30, another 20. That way you're not going all in at the exact pivot price. And when things go south, you get stopped out, right? So the a tool like a trend line is going to give you some additional cushion to work with as it moves upward towards that pivot. So that's something to consider. The other thing on trend lines is you're going to want to look for volume, right? You're going to want to see above average volume once it breaks through your trend line. So let's go to one more thing about this is it's always gonna precede a breakout, right? I think that's the key feature of a trend line is normally you would just get in at a traditional breakout, but if it hasn't reached the breakout point, that's where we're finding an early entry, right? That's the name of the game. You're finding an early entry where the price action pierces through a downward drift of trend, and then you're gonna get in there versus at the exact pivot. Okay. The other thing that you'll notice when you're doing this is a lot of uh, stocks that have a cup with handle pattern. That's almost the nature of that pattern, right? Because the handle almost acts like a trend line in a sense. And you can even try to identify from there getting in earlier than the exact pivot. So let me pull up the chart so I can kind of show you how to draw a trend line. And I actually pulled up some examples for all these buy signals. Okay. So here's a quick example here that you see that I've drawn, right? This was one I got in a couple weeks ago. So let me delete this line and show you. So let's say that was back on, let's say, what was that? May 29th. So let's go back in time on this change date function chart here, okay? So let's delete this. I'm going to go ahead and delete this trend line right here. There we go. And I'm going to show you some quick tips and tricks on how to draw the trend line because it can be quite sensitive. Someone just asked, is this recorded? Yes, this is recorded. I'm going to go over a lot of information. So fear not, it will be uploaded. Okay. So to draw the trend line, there's two ways. Either right click on the chart and click on temporary line pen, and then you can just click and drag something like this and connect those three peaks, right? And then when you connect those three peaks, you can then see that you can hover over that trend line you just drew. It'll kind of turn a little faded to indicate that you can right click on it and then set the alert. And just like that, you will turn it onto a trend line there. That one, give me 1 second. I think I don't have that on. 1 second here. Let's try that again. That didn't turn on for some reason. Let's do that one more time. Trend line, right click, set alert. There we go. That's our trend line. So sometimes you're going to run into, and I'm sure a lot of you veteran users know about this, but sometimes it's not going to identify your trend line because you're kind of drawing it right on top of a pattern. And if you notice, if you right click the pattern, it actually will let you set a pattern alert as well, which is what we don't want. So what I recommend is if you run into a problem where you can't set up the trend line alert, just temporarily turn off the pattern recognition. It's this button to the left of the printer. If you turn this off and redraw your line, it's going to be easier to right click it to set up the alert. But just like this, you see, I set up a trend line to identify the next point where it can pierce through. And I wanted to get in before it gets to this, this traditional left side high resistance level breakout. So when the price, see it kind of recovers above the 50-day moving average. And I wanted to see it to move further up past my trend line and get into, and that's exactly what happened. And the rest is sort of history at that point, right? So that's essentially what you want to do is again connect multiple points, multiple peaks, at least three, I would say, and then that way you can identify an early entry. Now, again, this is not a perfect science, but hey, if you know the company, you like the data, you like the fundamental financial data, and you see that it's setting up, and you want to consider getting in earlier, this is one of those tools to do that. Okay. Here's another one. Let me reset to present day. Give me a second. All right. So this is another one that I drew recently. You can just again start from the top from the left and then connect a couple peaks. It could be three or more, and you can identify an early entry point just like that. Right now, the price action is about 14% away from the left side high, but we're trying to see if we can get in before it reaches that point. Now, the question also then is people ask, how steep of a line can I draw? That's where it's a little bit more art, less science, right? I mean, we are essentially drawing, right? So it's a little more art, less science, but the way that Scott, my manager, talks about is you can think of like a clock, right? From the 6 and 3 handle. You want it to be somewhere in this top range. If you're drawing it way too steep, I mean, at that point, you're just making a reason to get into the stock, right? And if that's the case, that's fine, but you want to see where maybe that it can pierce through some downward trend. So try to have it in the higher range, but if you're drawing it too steep, I don't know if that's very useful. Okay, so just keep that in mind. Here's another one I believe I did as well. This one's actually quite close to the pivot. Unfortunately, we have a down day. I was hoping it'd break out so I could show you an example. But once that price action pierces through that resistance or pierces through your trend line, it'll actually send you a notification by email. And then also, if you have the MarketSurge app downloaded on your handheld devices, it will send you a trend line alert as well that it broke above the trend line. Okay. So something like this, I'd have liked to get in, at least a bit before the pivot. So it gives me an extra couple percentage points as far as cushion to see where it might go. Okay. Same for right here. I think this is the last one that I drew recently. This one also, it's 8% away from pivot, but I was connecting three peaks here, and I'm hoping that it can get back to this area where right now it's trading right below the 50-day average, but if it reverses above the 50 and pierces the trend line, we might have something to go on with that one. Okay, so again, that was for trend lines. Let me move this over. Let's go back to the trend lines here. And just some quick recap tips on trend lines. The first signal is again connect the highs or lows for your trend line. It could be a upward or downward trend. But at least for early entry, it'd be a downward trend line along with three peaks you're connecting. You're gonna want to look for strong volume as it breaks above the trend line. In fact, I want to say that's for all the buy signals we have here. For all the alternative buy points that we're going to talk about today, you're going to want to see strong volume on the breakout. And then set up alerts so you can stay informed. And then lastly, that's going to allow us to pyramid into the position rather than dumping all of it at the traditional breakout. Maybe you can pyramid in maybe 50%, perhaps a 50-30-20 rule. Put in a portion at that early entry, put in another portion as it moves upward and as you have more conviction in the stock. So we're buying into strength, right? Okay, and then continue to use your stop losses. Just because you're going to have an early entry doesn't mean that you're going to change that. I would say continue to have trade management rules, stick to your stop loss, whether it's 5% or the traditional 7 to 8%. Continue to have that just so you can not invest emotionally. Okay. Here's number two for you. This is going to be the relative strength line blue dot. I'm sure a lot of you know about this report by now. But we're going to go over here. Actually, you know what? Let me dissect that for you a bit. So this is a traditional chart that's going to show you the blue dot you can see right here, right? And essentially what that is, there's three components here. You see a numbered rating, okay? That numbered rating, the line, and the blue dot are all three separate things. They're not all identical, okay? And I think that's where it confuses some people. So I'm going to dissect that. The numbered RS rating is comparing the price action relative to the price action of the entire database of stocks. So our entire database of over 10,000 stocks and ETFs, it's comparing the price performance of the of this stock to that database, right? And it's a 12-month look back period, okay, guys? So those of you who see like the lines dipping downward and you see an RS rating of 99, you're probably pulling your hair out saying, hey, there's a bug on MarketSurge. No, it's because the RS rating is a 12-month look back period. Now, if you ever open this up on the side, you'll notice that under technical tab, we have a shorter look back period of RS as well, 3 months and 6 months. Okay, so keep that in mind. But the line, on the other hand, the line is different. The line is comparing the relative strength of the stock's price action to the S&P 500. Okay, so the line is comparing to the price action of the S&P 500. Okay. The blue dot, on the other hand, I'm going to give it to you verbatim from the report that you can find right under the open stock ideas button right here. It is when the RS line's hitting a 52-week high. So the line itself is hitting a 52-week high and the stock's building or breaking out of a base. So in layman terms, what does that mean? It means that this stock is a potential leader in today's market. It's outperforming the S&P at the 52-week high, which is why it has the blue dot, and it's setting up either building or breaking out of a base. So those are three things you have to understand the differences in order to utilize this report effectively. Okay. But the whole point of this RS line blue dot is to give you a buy signal in the sense that there's conviction in the move that this is a strong stock right now. It's a potential leader in today's market. Do you go and buy all the RS line blue dot stocks? No, not necessarily. You would still want to do your due diligence. Go look at the financial and fundamental data on the left side of the weekly chart. But the whole point is you want to look for a nice RS line blue dot that's going to give you more confidence. That might be an earlier entry. And you also look for this is where it's below the traditional pivot, which we'll go over in a second. Tom asks, how long does the stock stay on the blue dot chart? Good question. You probably notice here it says there's 6 stocks on the report, but if we go to the actual blue dot report, there's over 250 items. The reason for that is because we archived the results for 45 days. And let me explain why. This is a great segue to give you an example. For Disney, this one's showing up today. Okay, you see a nice blue dot. This is going to be able to tell us how many times in the last 45 days Disney has shown up on this report. So the more times it shows up on the report, the more conviction you're going to have of, hey, this is a really strong stock right now, right? Versus, a first timer like Brinker International, it's only shown up one time. That still might be good, but something like this, or even looks like Compo Secure has been there 11 times. That's going to be a lot more conviction. Now, look at this stock, for example. I'm going to go ahead and collapse this for a second so you could see this better. You see here, we have the nice blue dot, and we see it's actually trading 4% below the pivot. So, I mean, you could wait till you reach the pivot, but you can also consider getting in earlier if you like the data on the left, like you do your due diligence on the fundamental financial data. And you see a nice blue dot here where it's been outperforming not just once, but 6 times now because of what the data just showed us. And it has a nice blue dot. You can consider potentially getting in earlier. Now, again, this is not financial advice, not telling you guys to buy Disney, but I'm just showing you that this is what we would look for, right? And essentially, that's where you would find it is on the weekly chart. Typically, the blue dot tends to be more on the weekly chart. And on there, you'll be able to see whether there's a breakout point and if there's a blue dot supporting that the stock's currently outperforming. Okay. Let's keep going here. I think I just showed you. Okay, just one more time where to find that report. Open Stock Ideas top right. on the under the daily review, it's gonna be right over here towards the bottom. Okay, RS line blue dot. Okay, so that's the next signal. Now, let's jump to the third one. We're gonna talk about pullbacks to the 10-week line. Now, I really love this one because I think in nature it sounds really easy or seems really easy, but there are some nuances, right? And the thing is, it's just the nature of how the stock market goes, right? There's no stocks that go up infinitely as much as we wish they did, right? It's going to pull back, it's going to consolidate, but when a stock pulls back and dips back towards our 10-week or 50-day moving average, that presents a secondary opportunity, right? It gives us another chance to buy into the stock, or it gives us a chance to add to an existing position. Because what is it doing? It's giving us conviction that there's support for it to kind of follow that 50-day. Or if it doesn't, then it's going to show you that it's not as healthy. So let's dissect that a bit. So what is the 10-week line? So let's look at a visual here. The 10-week line is this red line that you see running along the price bars on any chart. If you're on the daily chart, it's our 50-day moving average of price. If you're on the weekly chart, it's a 10-week moving average of price. People might ask, okay, so which one do we focus on? The weekly chart, the 10-week one or the 50-day? It really just depends. I would say use both. The weekly, I believe, close is based off of Friday's close each week, whereas the daily, of course, is based on 50 days, right? Um, but what you want to see is something like this, right? Where there's a nice cup and handle, maybe a broke out here, maybe you're out to lunch and you're at the gym or something like that, and you couldn't get to that stock, or maybe you just had other opportunities and you missed the boat. It runs up and then it retraces back to this red line here, right? It dips down towards the red line, and then what you want to see as far as some of the nuances is when it dips back towards the red line, you want to see it close towards the top of the range for that day. So you see on this example I have here, this is a great example. It rebounds off the 50-day, and you see that that little vertical dash on that price bar is closing towards the top of the range. That is great, right? You like to see that. And then the next day, you see it actually gaps up a bit. So you want there to be a strong upside reversal off of the dip. Okay. So the question always that follows is where do we buy? Some pundits say to buy on weakness, which is where it dips, right? I would say most of the analysts that here at IBD would argue to buy into strength, right? Here at IBD, we talk about buying buy high, sell higher, right? Buy into strength. So ideally, you would have wanted to get in on this day, perhaps, where it's reversing upward on an up day, or maybe even this day here where it gaps up. You want to buy into strength on high volume is the key here for pullbacks. Okay. So let's go see some of what I put together as far as those nuances. So again, what is the pullback to 10-week? It's when it dips back towards a key moving average, which is the 50-day or 10-week. And then why does it matter? And furthermore, what is the nature of it? Is that it's a key moving average. It's showing us over the long term. Is there support for the stock? If the price action dips, does it rebound off the key moving average? Does it show us there's conviction from those invested to stay in and to buy into it? Or does it actually consolidate below the line and actually gives us a sign that it's not as healthy, right? So if you see a rebound off the line, that's the ideal scenario, right? We want to test the uptrend by seeing a bounce off the 10-week or 50 line that confirms support. That gives us a chance to either add to our position or potentially create a new position if you missed the boat the first time. Okay. So what to look for when it pulls back, you want to see average or weak volume, right? So when it pulls downward and dips towards the line, you want to see weaker volume. However, you want it to close typically towards the top half of the range of that price bar to show that towards close that there was a push for it to move upward. And then here's another key thing I didn't talk about earlier. You want to look at the first or second pullback after a breakout. So there's been a lot of studies and research done on this, especially with IBD, but there's higher probability of a successful pullback reversal on the first or second pullback. After that, it just gets too easy. It becomes too obvious, as Scott likes to say it too in his last webinar. But first or second pullback would be key after a breakout, and you want to buy into strength, right? So if we look at this again, first pullback. I think this would be considered the first pullback within 5% from the line. And then from here, you want to see close at the top of the range. You want to see an upside reversal, and then you want to see high volume to get into the upside reversal. Okay, so let's look at some live examples here. I'm gonna pull up some that I found on MarketSurge. In fact, there's actually a report built into here for the pullbacks. So if you click on Open Stock Ideas and go under Daily Review right here, pull back to 10-week line. Okay, we have them archived in chronological order. This is where you can find some of these pullback ideas. But I'm actually gonna pull up the ones that I've isolated under my list. Uh, I think it's under oh, right here actually. There we go. So that's gonna be this one. This is the first one. Let me go to the daily 1 second. Okay, so you see here we have an IPO base. The price moves up, it hits a power from pivot. And at this situation, if you ever see this flag, it's basically telling you to consider holding it through some volatility. It starts consolidating, but it eventually retraces back to this 50-day moving average line, right? And the nice thing is in this example, you can see that this day where it dips actually below the 50-day, it closes above the 50-day towards the top half of the range, which is nice. And then you see that, it starts to have upside reversal. And I would have said, you would have maybe considered getting in on one of these days. The thing I would say for this example though is I would have loved to see more volume on the upside reversal, but this looked more of a gradual upside as it moved forward and upward. So that's one example. Here's another example for Casey's General Store right here. This is what I would say is a bad example. Okay, so here you have a breakout, which most people would have considered getting in here. Maybe you didn't. Here's one pullback, the first pullback, right? And then here's a second pullback, and here's a third pullback. At this point, this third pullback, I would say, is not a great example of what you want to see in an ideal scenario. You see that it started consolidating a bit below the 50-day, and then you see that it gaps up. Now, some people might argue, oh, but Sunny, it went up and it went far up and away. But there was also an earnings event, you guys, and the earnings events can be quite volatile as well. So I would say the ideal scenario would have been more something like this. Here you're taking a bit of a gamble because you're trading around an earnings event and it was starting to consolidate below the line as well. But yeah, at this point it's a little bit more art, less science, but ideally going back to some of the key points here, you want to see light volume on the pullback, right? You want to see tight price action around the line, not below the line. Segueing to you don't want it to be sustaining the close below the 50-day, and then you want it to bounce with above average volume on the reversal. That's going to give you a green light, right? Buy into strength. Okay, so let's go on to the last buy signal here. We're going to talk about tight areas. So what is a tight area? A tight area is essentially where there's a 3 to 5 week period of very tight trading action on quiet volume and price action that doesn't go beyond 1.5%, 1 to 1.5% plus or minus in price range. Okay. And again, it's I want to say it's defined by this quiet strength, where you're seeing that people aren't getting shaken out. It's tight knit action of price, and the volume is very average or below average. That's what I would say would be the ideal scenario of a tight area where you would potentially. This is where a lot of people would consider adding to a position, and you may consider establishing a new one. But I think I've seen more people add to their position in a tight area formation. I'll show you that in a second live. But essentially what it is, it signals a bullish continuation, right? Because it shows that institutions are not necessarily ready to get out because they're kind of just sticking through that tight area action. And it establishes a second place where we can consider getting into it, right? So what to look for? Again, quiet volume and price for a 3 to 5 week period. You want above average volume when the stock breaks above that tight area. And then followed by that's formed from a traditional breakout. Okay. Someone asked, is the slide deck available on the MS website? I don't think so, but it is recorded, so you can play and pause the video. Does the chart automatically calculate the percentage, for example, my entry point alert to the pivot? Yes, so let me pull up the chart. So if you pull up any of those reports I showed you earlier, they will show you percent from pivot. It also show on the top right over here. But the tight areas, let me see if it gives you that. Yeah, so it does show percentage from pivot here as well. But I think by definition, the tight areas, which are signified by these blue shaded areas, it's already just identifying the 3 to 5 week period that are within that small band of 1.5% plus or minus of action, right? So let me show you some real examples so you can see what I'm talking about. Give me a second here. Let me pull up the examples. So and it's only on the weekly chart as well, right? 3 weeks tight, weekly chart. Okay, so let me pull up a couple examples. So here we have El Dorado Gold. Here's an example right here that I liked. You can see here from this consolidation base, it moved upward, and then it kind of just goes sideways for about 4 or 5 weeks. Okay. Here some people would have considered potentially adding to their position if they have it already or establishing a new one. And then from there, you'd want to see you want to see that at that time that there was tight volume as well. Here's a more, I guess, household names you can look at. Here's Charles Schwab. I think they had was it a double bottom? Yeah, we have a double bottom here. We have a pivot where I would say some people probably would have gotten in already at the pivot price, right? But it's been trading sideways for some time now. And you can see, I know it's a little hard to look at, but let me blow this up a bit. Maybe might be easier to look at. Um, you can see here that there's some blue highlighted area right there. That's the tight area indication. You see if I hover over it, it says tight area for 5 weeks, right? That's what we're talking about. Low volume, as you can see here, below average volume, and tight price action of less than 1.5% across 3 to 5 week period. That's where a potential place you can add to your position would be as well. Okay, I think I have one more example. I think it was NVIDIA. Yeah, I think I had NVIDIA, but I went back in time on this one. Let me see. Let's go back to 2020. Yeah, I think that's was well somewhere over here. There's a couple of them. Here off of this breakout, you had some consolidating for about 4 weeks of a tight area right here that you could have considered, as well as here. But bottom line is if you see a chart and you see some shaded area of that's blue directly on the price bars, that's what the tight areas we're talking about. Okay. And yeah, let me go over some key takeaways. I think what I'm trying to sum up here and the whole point of this webinar is to identify to let you know that there's more tools that you can be armed with outside of our traditional breakouts that the algorithm tells you. Okay, back over here. This would be ideal, don't get me wrong. I think this is where a lot of people would utilize the power of MarketSurge and the pattern recognition algorithm to get in at optimal points. But this also gives us the ability to add to our position over time where you can pyramid into it. So instead of dumping everything here, you can perhaps give yourself cushion and get in a little earlier. You can pyramid into the position and that way, you have a somewhat of a lower risk in a sense. And then that also gives you ability to get in later if you didn't get in the first time. Okay. So breakouts aren't the only way. You can use the moving averages, trend lines, pullbacks, tight areas, that sort of thing. You're going to want to focus on the volume. You've probably heard me like a broken record so far. Volume is going to be key in these alternative signals, right? Because we want to see conviction for the breakouts in these signals, whether it's a pullback reversal or if it's off of what was the other one here? The off of the uh, so we had traditional breakouts off of trend lines. So we wanted to break through a downward trend line, right? Once it breaks through above our trend line alert, then we want to see strong volume. So focus on the support, okay? The volume support. Lastly, it's going to give us flexibility to trade because let's be real, it's been a really choppy, volatile market, y'all. The past several months, especially with what's going on, all of the uncertainty, all of the, geopolitical things going on overseas, even at home here, you guys. it's going to affect the markets and it can make it really choppy. And the good news is we're now armed with more tools to get into the market, even if we don't have enough breadth or strong, breakouts or enough breaking out today stocks in that report or near pivot even. So this will give you more ideas, and I hope that this has been useful. If you have any questions, feel free to give us a call. Number 1-800-831-2525. You're also welcome to email us if you can't call. We're quite quick with it. Yeah, give us a call because it's actually kind of slow right now in the summertime. So if you wanted to talk to a coach, you can either schedule a coaching session or call this number right here. I'll answer this last question. Tom Hearn asked about the 21-day line as alternative signals. Yes, there is. There are people and analysts here that also use a pullback to the 21-day as well, myself included. So you can kind of apply the similar principles we talked about for the 50-day. Okay. All right. Thanks everyone for joining and happy trading. Have a great week. Thank you.